Federal Reserve announces first interest rate decision of 2024. Base interest rate remain unchanged at the range of 5.25% to 5.5%, in line with market expectations. Same as last meeting. In conclusion, there are two important points. First, Federal Reserve FOMC statement removed language that might further tighten policy. This was a big rewrite. Tightening tendency disappears. Any adjustments to interest rates will be considered, but before we have more confidence that inflation will be close to 2%. No rate cut. Second point. Statement reiterates that inflation has eased over the past year, but still high. Long-term goals remain unchanged. After the interest rate decision is announced, interest rate futures trading continues to hold down, as Prime Minister cuts interest rates for the first time in March. The probability is basically the same as before the FOMC announcement. Overall, American League owner stands still for fourth time. The signal to change stance is strong and be open to rate cuts. At the same time, Fed reluctant to provide forward guidance on rate cuts. Policymakers on a larger planet. There is ambiguity in this issue. Inside the Fed's mouthpiece, according Losroot, Fed officially adjusts interest rate forecasts, provides flexibility for rate cuts in coming months, provided he is convinced that inflation risks have receded. Analytical thinking. Fed officials have always liked not having options. The FOMC said in a statement, no rate cut expected until more confidence in inflation. That's what they like, no doubt. The wording is carefully calibrated to postpone current market funds interest rate cut in March. Suppressed, but at the same time, he did not rule out the possibility of a rate cut in March. Therefore, the market reaction was relatively mild. 10 minutes later, Federal Reserve Chairman Powell held a press conference on monetary policy. To sum up, there are 3 points to note. One bear said we have 6 months of good. We are confident about good inflation data, but need more confidence. Would like to see more data. Lower policy rates. Leaving it too late could weaken the economy too much. In theory, real interest rates will rise when inflation falls. It may be appropriate to start cutting interest rates at some point this year. Second point. We don't see strong economic growth as a problem. Uncertain. Need to see economic growth slowing to lower. The risks of inflating goals are gradually balancing out. Remaining focused on dual mission. Fully committed to restoring inflation to 2%. Continue to meet one after another to make decisions. If we see unexpected weakness in labor market, that would prompt us to cut interest rates sooner. The timing of interest rate cuts depends on our confidence. The third point. We are not declaring victory over inflation. I wouldn't say we've had a soft landing. Dot plot is strong evidence of FOMC's current position. There is a broad spectrum of views on rate cuts from the committee. No interest rate cut recommendations were made at this meeting. We are not actively considering a rate cut. At last, Powell's words made the market lose hope. He said that, based on today's meeting, I think a rate cut in March is unlikely. A rate cut in March is not the base case. Overall, Powell's speech, rate cuts and confidence appear multiple times, is a parochial expression, but the final conclusion. They also tend to dot plots and opinion analysis. Partialism, the last sentence, drastically reduced the market. Pressure on Fed rate cut in March. Pricing based on interest rate futures. Fed rate cuts expected to begin in May, rather than March. This is also consistent with what we predicted before. As far as press conferences are concerned, sounds beautiful. Among policymakers, there was a heated discussion on verifying that interest rate should be cut. It is foreseeable. Other officials are weighing in on the matter in the coming weeks. Want and next, the salesperson must have confidence in any. The word beautiful host comments set a warning. This could be the trigger word for the next 2 months. Next, let's look at individual stocks. Microsoft releases financial report. This is the first financial report since the completion of the acquisition of Activision Blizzard. The results are generally satisfactory. Microsoft achieved best quarterly revenue growth in the past 2 years and achieved record revenue for 5 consecutive quarters. Microsoft's revenue EPS US stock returns, cloud business revenue growth, and many other indicators exceeded market expectations. Viewed by department, all three divisions of Microsoft both reported solid double-digit growth rates and exceeded management's guidance. Revenue from Azure and other cloud services increased by 30%, better than the 27.7% growth expected by analysts. Last quarter's indicator was 29%. However, some analysts say unrecognized revenue from intelligent cloud business, calculated at fixed exchange rate, a year-on-year increase of 18%, equal to the same growth rate as the previous quarter. AD revenue also grew at a flat rate at constant exchange rates. This will disappoint some investors. This is also the reason why the stock price fell after the market closed. But, according to Nadella's comments on the earnings call, with growth expected to re-accelerate, Will Eldron is taking market share. Analysts believe, as customer IT spending budgets improve, AI's contribution to our cloud revenue growth will increase. Channel research shows strong demand for AI services. Revenue growth from AI will accelerate in the second half of the year. Longer term, AI monetization can drive Microsoft's revenue and profit growth, continue to re-accelerate for many years to come. Guidance. Microsoft offers relatively optimistic guidance and predicts that it will continue to maintain its advantage in the field of cloud computing. However, there are also two negative factors in the guidance. The first includes games, Windows, and services. Forecast for the personal computing sector, including hardware, revenue fell below market expectations, partly due to continued weakness in PC demand. Second point, Microsoft CFO said, the company expects capital expenditure to increase significantly in March quarter, judging from the stock price, high and fall. Some analysts believe this is because the benefits of AI will be fully reflected in stock prices. Wall Street is confident about Microsoft's stock price prospects. No one recommends selling. The average price target is about $443. In a subsequent conference call, Microsoft's response to high profile, the power of Capable's generative AI tools, introduced, in short, Microsoft's financial report is the most valuable company in the world. Another reliable proof of, but good results may not be good enough. Although Microsoft leads the way in artificial intelligence, but overall it is still a mature business, unlikely to experience anything like what we have at NVIDIA and Huawei Computer and other companies. Explosive growth seen. According to consensus estimates, future forecast, revenue over the next 5 years will grow at a low double-digit rate. Predict stock trading prices in the short term is impossible. However, in the long run, stocks will track their business fundamentals and obey the immutable laws of money. If interest rates remain low, a higher equity multiple is reasonable. Let's look at Google again. Google releases financial report. Outstanding performance on both revenue and earnings per share. However, the financial report was lower than expected due to advertising revenue and disappointed investors, causing stock prices to plummet. Specifically, $65.5 billion in advertising revenue, hundreds of millions less than Wall Street expected. The problem mainly occurs in Google's network department. Fourth quarter revenue was $8.3 billion. Yuan fell by about 2% compared with the same period last year, caused by market concerns about the broader digital advertising environment. Last year's third quarter was a lack of cloud growth. Advertising growth appears to be slowing now. History repeats itself. Yes, advertising growth has slowed. This was in the previous feature video. We have already mentioned Amazon's advertising revenue is growing rapidly, but it's just a quarter. Next thing we said it was an election year, and the election season is lengthening. All advertisers will benefit. What's quite surprising this time is a sudden rise in cloud revenue. Cloud revenue turned into a flop last quarter, but this time the year-on-year growth exceeded 25%. Cloud computing achieves full-year profit for the first time. There's a downside here, is the decline in the company's free cash flow. But this decline was caused by a one-time tax payment. As of the end of the fourth quarter, Alpha, Its net cash balance approaches $98 billion. Is that the company has a fortress-like balance sheet. And since long-term debt is minimal, the company remains one of the largest tech companies of all time, with the strongest balance sheet. Investors should take note. Google currently generates sales per dollar, would generate approximately 20% of free cash flow, 85% to 90% of them the company uses to buy back its own stock. Fourth quarter of 2023, Google buys back $16.2 billion worth of stock, compared to $15.4 billion in buybacks during the same period in 2020. The pace of buybacks has accelerated. Stock buyback boom expected to continue into 2024. Other good aspects. Google's momentum on YouTube remains strong. In fact, YouTube ad revenue exceeds analysts' expectations. On investor conference call, HR1 emphasizes the number of daily views involved surged to 70 billion. This compares to 500 daily views reported at the beginning of the year. Billion times. He is the invisible force at work. Google management takes operational discipline seriously. Significant reduction in company headcount. It proves this, although sales increased, but the number of employees fell to 182,500. This compares to 190,100 in the fourth quarter of 2020. And according to the criticism, there will be further layoffs this year to increase efficiency, analysts believe, even in the face of higher capital expenditures. Further cost reduction measures may also significantly improve bottom line performance. There are many risks. For details, please take a look at the previous video. In terms of performance, we care more. How artificial intelligence and competition affect profit margins, and continued regulatory pressure. How it affects future cash flows. For example, Google. If you lose a device such as an Apple default search engine status, what will happen? Another example. Google's investment in artificial intelligence is not cheap. Express. Capital spending this year will be significantly higher than in 2023, and facing the dilemma of brain drain. Some big names are leaving Google to start their own business. Judging from the stock price. From a technical perspective before the financial report, the stock is overbought. After hours pullback appears to be a necessary reset for technical conditions, and even more so through financial reports, hitting the support position in one breath. You may still remember, after the release of the third quarter 2023 earnings report, we also saw Google's stock saw similar decline. At that time, we gave the buying bottleneck. As a long-term investor, tends to slow staggered accumulation. $120 is a good price to accumulate shares. Overall, stock performance over the past 5 years has outperformed the major indexes. Long-term risks and rewards remain attractive. 5-year expected CAGR of 14%. Earnings performance is just a bump in the road. This upward trend in the next few years is usually will last. Okay, that's it for this video. When it goes up, you always hope that it will pull back and add more positions. Wait for a few days for the correction to worry about this and that. Invest in this. Looking forward is all risk. Looking back, it's all an opportunity. Hope video content. It is helpful for everyone to understand the current market. All content is just my personal sharing. If you think the video content is good, please remember to like, retweet, and subscribe. Thank you. Finally, I wish all my friends prosperity.